Well, good afternoon. Tony Virtue speaking, Virtue and Partners, with our regular monthly update. And probably the most relevant thing at the moment is the RBA last week have, capitulated, if I can use those words, and accepted that interest rates will rise in Australia earlier than they kind of alluded to. At first blush, you might think that's a bad thing, in that interest rates going up is generally bad for equities, properties, etc. But you only do this when economies are recovering. Look at it as if you're on the treadmill and you can easily run without any kind of elevation. So providing this is done slowly and steadily, then we'll take it in our stride. And indeed, that's how the markets reacted there. Again, see this in the international context. So global recoveries, as you see, New South Wales today up to 90% double vaxxed, which is a great thing. And we're very much looking forward to seeing you all face-to-face as soon as we can. So as you anticipate that kind of recovery, you've now got labour shortages. Those of you going down to cafes, bars at the moment, hard to find staff. That is probably inflationary at least in the short term. Got to pay people more wages to get things done. Now, whether that will balance back as we improve our net migration next year. We've lost 2 years of migration, so anticipate they'll go very, very hard on this. That should help to fill some of the rental properties in the city, should drive the economy quite a lot better. And Australia is still regarded as really a great part of the world to live. So expect net migration to really help those numbers moving forward. As you'd expect at this time of the market, a lot of M&A activities, as you can see in the attached numbers there. So for the largest mergers and acquisitions we've seen in 20 years, a lot more to come. And your fund managers are eagerly loading up on companies that look like they're takeover targets. You want to buy an Australian company at the moment and get control, you're probably looking at 30 to 70% control premium there. So Sydney Airports this morning being a good example of those kind of numbers coming through. Can't stop, of course, without commenting on property. Well, yes, they're tightening up on some of the lending criteria, but really at the moment there is $2 trillion of additional value created, literally puff the magic dragon, in the value of Australian property. That equates pretty closely to the value of the Australian stock market. A massive free kick for those who've got property. And this will allow people to downsize, draw money out, maybe pump up their super. But this is, do not underestimate just the fortunate opportunities that arise through this. We do need to manage the recovery, manage interest rates going up, but provided that's done steadily and we stick to floating interest rates, we should be okay there. Finally, we're having our Christmas functions where we're back to normal, and I very much look forward to seeing you all face-to-face in December. So that's enough for today. Tony Virtue, when experience pays.